Thank you, Mr. Chairman, for convening this hearing on both legislative and regulatory proposals to address the recent spike in subprime mortgage foreclosures. We're fortunate to have with us a distinguished panel, and I extend my warm welcomes to Secretary Paulson and Secretary Jackson and Chairman Bernanke. We're here today largely because of a problem in a specific and relatively narrow segment of the U.S. mortgage market, which quickly spread to other areas of the financial markets. These are serious issues now affecting our entire economy and deserve our careful oversight. As we proceed with this hearing, I believe we should be keenly aware that the regulators and markets are already addressing mortgage foreclosures. Market participants and regulators are working to assist homeowners to mitigate the distress resulting from the resetting of adjustable rate mortgages. Lenders and GSEs are offering replacement loans with lengthened terms and other options to lower payments and keep families in their homes. We should take note and legislate where appropriate, but avoid getting in the way of regulators and market forces which are performing their functions with the tools already available to them. This injunction to act cautiously should not be misunderstood to mean legislative action is inappropriate in all instances. There is general agreement that abuses have occurred in the subprime market. In July, several colleagues and I introduced H.R. 3012 to address these abusive practices. There's widespread agreement that these are practices that should not be tolerated. Better regulation of mortgage brokers and other originators is clearly required. But we do not need a bailout or other legislative action that overreaches and impedes the market's self-correction we are witnessing. In responding to the market turmoil, we must not lose sight of the essential fact that the subprime lending market has been very successful in providing housing, especially for low-income Americans. I recently heard it described as having brought, quote, the miracle of global liquidity to low-income neighborhoods all over America, end quote. The secondary market and securitization have greatly benefited middle and low-income Americans. Preserving this dream of liquidity and home ownership should be a high priority of this committee as we work together on this issue. We should remember that while there have been defaults and foreclosures, there have been many more families who've seen their dream of owning a home successfully realized. In fact, a new study just published shows that if California, Florida, Nevada, and Arizona are excluded, there has actually been a nationwide drop in the rate of foreclosure filings in the most recent period. Last month, we saw what happens when investors make decisions based on heightened emotions and minimal facts. Similarly, as we have learned in the 5 years since Sarbanes-Oxley was enacted, rushing to do the right thing in an unsettled market environment can yield unwanted consequences. We look forward to your testimony and expert analysis, and I thank you for your attendance here today.